Suppose there are two partners, A and B, sharing profits and losses in the ratio of 3:2. And this is the balance sheet of A and B. A's capital 30,000, B's capital 30,000, reserve fund 10,000 rupees, creditors 10,000 rupees, total 80,000. Building 40,000 rupees, cash 15,000 rupees, profit and loss count 5,000, furniture 20,000, total 80,000. So on the same date, C comes as a new partner for 1/4 share. He brings 20,000 as capital and 4,000 as goodwill out of the share rupees 5,000. So it's a new thing for you. It was decided to appreciate building by 20% and reduce the furniture by 10%. So you have to prepare the new balance sheet of A, B and C. You know the steps. First of all, set the ratios. I mean to say new ratio, sacrificing ratio and gaining ratio. So there are three partners, A, B, C. Old ratio is 3:2. Because the question is silent, it's not giving any further information except C is coming for 1/4 share. So old ratio and sacrificing ratio will remain the same. So sacrificing ratio 3:2. Now we have to calculate new ratio. I mean to say for A, B, C. You know, C is coming for 1/4 share. I am applying the shortcut. I have already explained you in my previous segments. So C is coming for 1/4 share. The difference between 1 and 4 is 3. So multiply 3 by 3, that is 9. Then multiply 3 by 2, that is 6. And then 3 plus 2 is equal to 5. 5 multiplied by 1. 1 means this is the upper value of 1 by 4. So that is 5. So new ratio will be 9:6:5. So after setting the ratio, we'll start journal entries. First of all, we have to distribute accumulated profits. Is there any accumulated profit? Yes. On liability side, there is a reserve fund, rupees 10,000. So journal entry will be reserve fund account debit to A's capital to B's capital. These accumulated profits are always distributed in the old ratio, in the old partner. So the amounts will be 10,000, 6,000 and 4,000. Then we have to distribute accumulated losses. Is there any accumulated loss? Have a look at the balance sheet on asset side. Yes, there is profit and loss count 5,000. It means this is the accumulated loss of the firm. So distribute that. So journal entry will be A's capital account debit, B's capital account debit to profit and loss count 3,000, 2,000 and 5,000. This accumulated loss has been distributed between A and B in their old ratio of 3:2. Then we'll pass the journal entries for revaluation. Building has been appreciated by 20%. Building was for 40,000, so it has been appreciated by 20%, means 8,000. It's a gain. Building account debit to revaluation account, rupees 8,000. Then reduce the value of furniture by 10%. Furniture in the books is 20,000, 10% means 2,000. So journal entry will be revaluation account debit to furniture, rupees 2,000. So there are only two journal entries on revaluation. So we have to distribute the loss or profit on account of revaluation account. This loss or profit can be ascertained only when we prepare the ledger, I mean to say revaluation account. So leave the space for one journal entry. We'll come back to the journal entries when we come to know the exact amount of loss or profit. Then pass the journal entries of C's incoming into the firm. Be careful, it's a new thing for you. He brings 20,000 as capital and 4,000 as goodwill out of 5,000. What it means? He was supposed to bring rupees 5,000 as goodwill, but he couldn't bring. he brought only rupees 4,000 as goodwill. It means he has brought part money for goodwill. So it's a new situation for you. Now the thing is, how should we handle it? There are different situations, but in my questions I will use current account. I mean to say new partner's current account. There are so many different options. Be careful. So okay, he is bringing 24,000. So cash account debit to capital, and then because he couldn't bring 1,000 rupees for goodwill, so what we'll do, we will assume that he will bring after 1 month, 2 months, or a short span of time, he will bring the money of goodwill, that is rupees 1,000. And till then we can create his current account. So the journal entry will be C's current account debit rupees 1,000, cash account debit 24,000, to C's capital 25,000 rupees. And then we'll pass the journal entry for adjustment of goodwill, that is C's capital account debit to A's capital to B's capital. You know, this adjustment entry for goodwill is always passed in sacrificing ratio. So the amounts will be 5,000, 3,000, 2,000. This is the sacrificing ratio of A and B, and that is 3:2. So what you have noticed, only one thing extra you have to do, you have to debit C's current account, and the amount will be the shortfall. I mean to say the amount he couldn't bring for goodwill. So this is the only difference when the new partner brings part payment of goodwill.